front. So we can just kind of ease into it. Yeah.
All right, what are we talking about? What's it?
Well, Matt usually talks about the market a little bit. Think that your four books, The Greatest Trade Ever, The Frackers, The Span to Solve the Market, and A Shot to the World, all those themes,
Okay,
fracking, hedge
sure.
funds, blah, 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 those are all current. Michael Burry just, died today or whatever. So that's right in there.
Just
Wait,
died?
wait. No,
I thought he died. Oh,
no.
no.
He shut down his hedge fund. He did
Same
not
thing.
just die.
Same thing. No, no, no.
Wait, no, I think he just deregistered. He
Yeah,
deregistered. He didn't have to tell people what he's doing.
right.
Well, I mean, that's what we can talk about. All that. All
I
right. So,
think I'm following so much. Yeah.
all right. Okay. So, Matt, why don't you just get started, man?
Are we recording now?
Well, we've been recording the whole time,
Oh, awesome. All right.
but I'll cut that part out.
I mean, you don't have to. I mean, it's
Uh,
good people to see
all
how the
right.
sausage gets made.
All right. Good, good, good. Okay. Maybe I will.
Yeah, I mean, whatever. So, yeah, so start off like we always do. Market sucks today. Seeing a rotation out of the momentum stuff into value. I don't think it'll last actually. What do we? Yeah, I mean, value looks like it's getting hit today too. I'm dubious that value exists anymore. I've written about that a lot in the newsletter, but I think every dip has been a buying opportunity. So until proven otherwise, I'd probably buy the dip. One of these days, a sell-off like this will be the top, but don't think we're there yet. Probably get a Santa Claus rally at some point. So
Isn't the
I thi-
proverbial sign of the top that shorts throwing the towel? Michael Burry just threw in the towel. We got Greg Zuckerman here or Gregory Zuckerman from the Wall Street Journal, wrote four cool books. One's about, what would you call the greatest trade ever? How John Paulson, shorted whatever he shorted back then, subprimes. So, what do you think about that, Greg?
Well, I don't think he's shutting down. I think he's just sort of hiding from us all, or trying to, because there's a lot of focus on him. I wrote about him in my first book. I spent time with him. He's an interesting character, super smart, got 2008 right. I don't think he's gotten much right since then. I may be wrong.
no, I don't think he has.
Yeah.
Right.
And he also didn't make that much in '08 either. He did all right. I mean, he did better than most. So you want to pay attention to these guys, but we have this inclination, this eagerness to find oracles when it comes to investing, and there's really just one. And even he hasn't done so well the last few years. So, I mean, listen, what's the lesson? Just be balanced and thoughtful, and don't chase trends, and don't worry about daily shifts in the market. My gosh.
Wait.
Right.
So hold on. You just won. I'm assuming you mean Warren Buffett. So you don't put Jim Simons in there?
I mean, he's different.
Okay,
He set up a trading system. He has
got
an
it.
approach. He never ever made predictions. And anyway, they were
Right.
short-term predictions.
Okay,
So yeah,
got
I'm
it.
talking
Got it.
about people that kind of tell you where things are going. And even those guys got it right just like 51% of the time. We're talking about Renaissance Technologies and their Medallion Fund, which is still outperforming. Their other funds haven't done well lately, though. They've got these funds for the public, et cetera, or for other kinds of investors. But their key hedge fund has still beaten the market. But it's just really, the older I do this, I mean, my God, you too. No, isn't the lesson stop trying to beat the market and trying to anticipate twists and turns, the next moves and shifts?
So yes and no. Um, you know, eh, I think beating the idea of beating the market is problematic from a couple of standpoints. Obviously in 2008 we had a 60% drawdown. So if I were down 50, I beat the market. I would argue that sucks. On the other hand, if you look at say long term, 8 to 12%, do I believe you can do better than that? I do. So what, but can anybody predict? No. I mean, you've got all these people now, are we in an AI bubble like, 1999? Is it going to pop? Who knows? And, that's why I say, you buy the dip until it's proven otherwise. every time momentum stocks have sold off, they're right back where they were a lot of times the next day. I mean, we're down 1% right now. We'll probably be up 2% tomorrow. And you've got, I think, for the first time ever, a president who is locked and loaded on the market. I mean, Trump will tweet something and, everyone's going to buy tomorrow. So you can't time it. So what we teach people, be invested in the top themes, but always have hedges because you never know when this thing is going to unravel. Could we be in the most massive bubble we've ever seen? Sure. Could we also be in the first innings of the biggest bull run we've ever seen? Yep. And, do I know which one it is? I do not.
Mm.
So I think you set your portfolio up to profit regardless, and that's how you sleep at night.
Right.
Seems reasonable.
Yeah. So let me ask you a question. So like how do you guys define hedge fund, right? Because to me it always meant like bigger, better. Guys are at 20% and the market's at 8. You posted stuff, Greg, and like it's all over there these days. Like the best hedge funds are like 13%, whatever. A lot of them are like 2. How do you know how many fees they charge? So probably at the end you're losing money if you're only up 2% in the fund. So how do you like how do you define hedge fund, Greg and Matt? What is it? What is a hedge fund these days?
A hedge fund is how it's a vehicle to charge and how you charge people. It's defined by how you charge mostly, and the fees, the 2 and 20 historically has been what you charge 2% management fees and 20% of the upside. And they still are the best and brightest, but because of those fees and because it's just really hard to predict the market, they've lagged for a long time now. They've cost investors, and maybe after fees or before fees, they would do a lot better, but they haven't really.
Let me ask you this. This is my theory, but I don't study it like you do. It seems to me that hedge fund underperformance or sucky performance started right around the time that Raj Rajaratnam got convicted of insider trading.
Ah,
So
ah,
my
good
my
one.
guess, and again, I haven't studied this because I don't care, but my guess is that all of these guys were doing insider trading, and the moment that Raj went to jail, they all realized that that probably wasn't a good idea, and that's when they all came back to earth because they had to compete with everybody else, which,
Right.
again, is very hard.
So I don't agree that that was the turning point, but you're not far off in that I think Reg FD changed a lot of things. Reg FD, regulation, full disclosure, transformed how investors on Wall Street operate, especially the hedge funds, meaning that it made it a much flatter, more level playing field. You can't just tell somebody, a portfolio manager, a trader, an analyst at a hedge fund, either that it'll be an analyst upgrade, downgrade, that earnings are going to be good, bad, etc. New products going to be rolled out. And that was par
Right.
for the course. And there was nothing illegal about that, nothing inappropriate. I was talking to someone not that long ago. I'm writing a book, a little more historic book, and somebody who worked at Michael Steinhardt's firm. And they said, yeah, Lou Gerstner came in one day. He was the CEO of IBM, and he told them his plan and how he's going to transform that company. And they're like, geez, sounds great. And they backed up the truck and they bought a lot and they made a ton. And there's nothing inappropriate back then. Today, you'd get, well, I don't know what this justice would do, but that would be against the law. So, yeah, things are there's a level playing field. It makes it much harder, which all the more reason why guys like Jim Simons and Renaissance have an advantage because they don't depend on
Right.
information and getting and they depend on information, but it's a lot of pattern information. It's information that derives from patterns and such, and from data that's public.
Yeah. No.
Well,
Yeah, all right.
do you think investors though are really satisfied with those returns? I mean, God, I think Matt and Jeremy and I do better than that. You know what I mean? So like a lot better. So why would
Well,
anyone be
they
satisfied with
seem to be.
10%? I don't
Yeah.
understand that.
It's not just hedge funds, it's private equity as well. Part of it, this is going to sound really cynical, but part of it is if you're on a board, investment board, or you're a consultant in that world, you're not going to charge people to say, hey guys, we should be in the Vanguard 60/40 funds.
Yeah,
It's
true.
low
Right.
cost, good upside. You get some upside, protect your downside to a large extent. Let's go over. Let's put Brown universities, pension
Right.
endowment in that. They'll be like,
Yeah, no, that's true.
dude, we're not paying you for that. That's what we're
That's
paying
true.
for you to tell us to buy Vanguard. No. And also, the truth of the matter is, these investors are very sophisticated and they're savvy and they're smart and they're hardworking. We're talking about those
I
that
agree
run
with
hedge
that.
funds. It's just that, like, as you suggest, after fees, it's really hard to get outperformance.
What do you think about that, Matt?
I
Same?
mean, I agree when it comes to, the traditional investment landscape where, most active management is index hugging and then you've got like, the arcs of the world. Um, I saw Kathy Wood at the Cantor Crypto Conference. I wanted to go up and see if she'd
You're
take a picture with me, but I didn't have the guts. But
right.
She should take a picture with you. Come on.
well,
Yeah.
but yeah, she doesn't like me.
Oh, really?
Yeah, well,
Right.
I did the inverse ARK ETF a couple of years back, so
oh.
that rubbed her the wrong way. But one of these days I'll go up to her at a conference
All right,
and see
sure.
if I can get get a
I'm
picture
betting
with her.
against that.
Yeah, I mean we'll see. But
Right.
yeah, so I think what passes for active management, in our industry a lot of times just really stinks. And it's just a way to charge more for what's basically an index. I do think there are better ways to do active, being say thematic about it, but I don't think a lot of that is out there. And yeah, I think it's tough to find alpha. I started investing in the early 80s, and back then, if you were smarter and willing to work harder, you could find things that other people couldn't find. I mean, now we all have Bloomberg, we all have the internet, and we all have AI.
Yeah. Yeah.
That's why I argue value investing is dead. In the 80s, could I find undervalued companies that no one else saw? Well, yeah, all day, every day.
Right.
Can you find them now? You know, every once in a while, but can you consistently do it? I mean, I don't think you can.
But why is it just value investing that has killed? Why isn't it any
Well,
kind
I mean, I
of
think anything fundamental where, I'm relying on being able to find something before anybody else does.
yeah.
I think that is highly problematic. I think maybe it isn't necessarily on the growth side because, again, I can be smarter because, maybe I'm recognizing, and I'm just making this up, but maybe I'm recognizing, what, AI is cool, but quantum is going to be better. And maybe I'm recognizing that 2 or 3 years ago
Mm.
versus everyone now being like, oh, quantum, quantum, quantum.
Right.
Yeah, everybody's in that trade. Now it's starting to unravel. But I still do think on the growth side, on the thematic side, I do think you can outsmart other people. I just don't think you're going to find like undervalued companies consistently where, value is a thing. But I do
hmm
think you can still find it on the growth side.
Okay.
All right. So let's move on to the frackers, right? So, like Porter Stansberry, one of Matt's, favorites, said 5 years are going to be very interesting for nat gas.
Wait. One of my favorites from a marketing
Oh,
perspective,
oh,
um,
oh,
from
I've never heard you say anything bad about the dude, so I'm just
well,
saying,
because I mean, I'm in awe of his marketing.
okay,
But if
whatever.
you look at some of the returns of his
Oh,
stocks,
okay.
yeah, not so much.
Oh, my bad. So should I just
That's all right.
should chop this piece up or what? Throw
I
this one
mean,
away?
yeah,
As long as I
go
already
with it.
started. I already
Yeah, no,
started.
worst case, I'll just laugh at you.
All right. So he said 5 years, nat gas, massive increase in infrastructure, blah, blah, blah. Nat gas export is about to dive. Or export demand is about to almost triple, excuse me. And then, Greg, you put something out that said Russian oil output's about to dive. Nat gas is like, for the month or is up like, 50% from 3 to, 4.5. So where you at with that? And, what do you think of Landman too, by the way? I mean, you must like that, no?
I like the theme. I think that whole world doesn't get enough attention. Everyone talks about Silicon Valley for innovation. When you think of innovation, maybe on the East Coast, there's so much innovation in the heartland of this country. And when you travel there, I had the great fortune of going to these places: North Dakota, Pennsylvania, Louisiana, Texas, all these kind of places. What they've done, just drilling down a few miles and then turning that drill bit horizontally and then targeting a formation a few miles down horizontally. It's amazing. We don't get enough credit. It's a little bit of a bias against the heartland and the red states and such. And just how we've transformed. I mean, that's what my book's about, how we transformed from a country that was running out of oil and gas to one that we're exporting it. People without gray hair don't recall. We were desperate about the future, and it was understood that we were running out. And we literally sell crude to the Saudis at times, which is just mind blowing. So yeah, listen, in terms of prices, obviously we've got demand due to AI and others that there's a consensus now. It was going to be, it was understood we were running, it was dying out, but no, it's going to keep growing. We're going to need all this stuff. We're going to need nat gas. We're going to need oil. We're going to need wind. Everyone's like got some bias against either one, depending what party you're on, but we're going to need it all.
Yeah,
Right.
I mean that's the thesis that we've got as well. I mean, to make AI work, it's all of the above on energy. And yeah, and really that's another area I think thematically you could try to find alpha: energy infrastructure, first order, second order, third order. Yeah, I mean everyone knows NVIDIA. Yeah, I don't think there's any alpha to buying NVIDIA here. Again, if you had spotted NVIDIA a few years ago, that's a different story. I mean, here, I think a NVIDIA is a must own, but yeah, it's not the same buying it here as it was a few years back. But I do think there are things in energy and energy infrastructure where, you can still dig up some pretty interesting names. And we spend a decent amount of time writing about energy and energy infrastructure.
Yeah, I mean, go ahead, Greg. Sorry.
I was gonna say, it's the thing that strikes me, it's remarkable, is the shift on nuclear. And we
Right.
all remember the time when, oh wow, it's scary, it's dangerous, and no nukes, and Springsteen and the concerts, and my God, now it's seen, and as it should be, as a green energy source.
Yeah.
Right.
And it's domestic and safe. It's fascinating, the change.
So, Matt, are you still into Oklo or any of these names, or they kind of pulled back too much, kind of waiting for some reversion of some sort, or what?
I mean, I'm small. Again, my favorite's BWXT because that's a real business versus like, the Oklos and the SMRs, which are years away from
Right.
making any money.
Right.
I mean, they're trading vehicles, so I mean, you can make a lot of money in a short period of time, but BWXT to me is the one that's the real business.
What's
We have
that company? What's that?
Yeah. What is that?
BWX Technologies. So they
Gotcha.
Right.
they make a lot of the infrastructure for nuclear. They do stuff for
Oh,
nuclear
nice.
subs and things like that right now. So
What's the
they
market cap?
actually make money. I mean, it's a bigger
Small
company.
stock,
I'm
really?
pretty. No, I think it's a bigger company. BWXT. BWXT.
All right. I'm going to test my skills here, fellas.
Yeah, it's a $16 billion company.
Wow. Wow, very nice.
Yeah, supplies nuclear components and fuel,
Hmm.
precision manufactured components for commercial nuclear industry, technical to support the government. So
Gotcha.
they actually have business.
Nice.
Right. Got it. All right.
But they're also not nearly as memey as like an SMR or an Oklo. So like, we have a 2x on SMR. We
Hmm.
don't have a 2x on BWXT because retail traders don't care.
Hmm.
Got it. All right. So I'm going to switch up here a little bit again, right? So Greg, you have your book out. What was it was called? The Great Trade, the Paulson thing.
The
I lost my
greatest trade ever.
the greatest trade ever. My bad. I lost my notes here somewhere.
How could
But
you forget?
so recently, like I just read something today, mortgage foreclosures surged 20%.
Mm,
U.S. chartered depository institutions are carrying like triple the amount of securities they used to. Loan delinquencies are up a ton. Ray Dalio's saying like the world's about to end. Michael Burry just bailed. There's like this massive outflow from the Spider private credit ETF recently. So, like, where are we at with all that? I mean, are we going back to that, or and let me say one more thing. What made me think of this is I went to buy a car the other day, and
mm.
the salespeople were so predatory. Like, they wouldn't even sell me the car unless I took like a loan with like 8 points in it or whatever, right?
Ha.
So I don't like it, and I used to be in the mortgage business a long time ago in Florida, so I kind of felt the same. Any
Yeah.
any any thoughts about that?
I mean, back in those days, as you guys recall, oh 06, oh 05, oh 06, oh 07, the kinds of loans that we were making,
Yeah,
there's no sign of those. No doc loans. People just made up their income
right.
and there's no checking. So we're not seeing that. And the economy is pretty stable.
Okay.
Unemployment's weird. Unemployment has been low, and yet you hear all kinds of people complaining and angst among especially younger people. But yeah, I don't see any kind of collapse of the housing market. It's a weird market. Things are still relatively strong and yet frozen. There's not that much going on. It is remarkable how little activity there is transaction wise. It just there's that distance between the buyer and the seller, and it's like a standoff out there. So that doesn't suggest any market that's going to kind of collapse anytime soon. My headspace is devoted to kind of what if crypto goes to 50,000? What will there be an implication for the economy and broader market? There wasn't in what was it? 2022 when Sam Bankman-Fried's company FTX collapsed.
Yeah.
You shrugged it off. So what would happen here? Is Michael Saylor's company so big that or is Matt's fund so big that it actually is going to have a broader impact or no? I mean, these companies are sitting on, I think Saylor is the company's fine even if crypto goes to 50,000, but that takes out the marginal buyer. Anyway, I'm trying to think these things through.
Right.
Yeah, so my thought on the economy is we've got kind of a two-tiered structure where if you're wealthy, you're fine. I mean,
Yeah.
you're as good as you've ever been.
Yeah, you're great.
Everything is gangbusters. If you're poor, you are worse off than you've ever been. And what I don't know is and politically I would say we can't survive that, and I think some of what you saw in New York is based
Yeah,
on that.
yeah,
I
yeah.
think others is just the choices. It'd be interesting to see what would have happened in New York if you had some like real choices. But can the economy as a whole keep chugging along when the poor keep getting poorer? Can the market keep chugging along? Yeah, I don't know the answer to that. My guess is it probably can, as long as the rich keep spending. The rich companies keep spending on AI capex. Yeah, I mean, I think it can keep going. Again, politically, at some point, you've got some issues, and it is interesting that it seems like on the Democratic side, the most popular people right now are the socialists. I think that tells you something about the mood out there. So just
Yeah.
that's what kind of I'm seeing now. Does that lead to a 2008? I mean, I don't think so. But could
Right.
we see like, credit card delinquencies blow up, auto delinquencies, certainly anything subprime? Yeah, we could, but I don't think we've got like the interconnectivity like we had in 2008 where, with a stripper in Florida that owned 8 homes,
Right.
forecloses, and that impacts, guys in Greenwich.
Right. Yeah. Good analogy. So let me ask you another question. So Joe Rogan, just off script, I think he said yesterday, like talking about this theme, rich versus poor, that. Like he said, oh, there's a 70% chance we're gonna have a civil war or some big number. I mean, and obviously it's probably not true, but like, what are your thoughts on any of that, Greg? I mean, are we in a civil war coming up? I mean, is there something like that?
Whoa.
Survival of the
I
classes?
hope not. I certainly hope not. We have there's a lot of unhappiness below the surface. I've long believed, and we've written about it as well, that a lot of the political decisions the voters have made over the last number of years, they don't necessarily reflect policy as much as this undertone of unhappiness, be it
Right.
drug use, underemployed, a lot of men out of the working world, loneliness, people aren't getting married, they're not having families as much. There's a lot that is going wrong that I don't think is the direct that we're not focused on necessarily, and we focus on rent stabilization or some policy, whereas there's just a lot of just unhappy people. A lot of people just, I mean, it's my own bias, but the Democratic Socialists, the Mamdani's party, I didn't realize they meet, or a lot of them, not all of them, a lot of them meet a couple times a week. And why are they doing that? I mean, they want to affect policy, obviously, but a lot of it is just finding a family and
Right.
finding a church or a synagogue, or like they're
Very
not
tribal
going.
these days, I say a
And
lot.
also they need companionship and friendship. There's a loneliness aspect of it.
Right.
So I don't know. I think that's as important as any of the other kind of things we're discussing.
Yeah.
I think along those lines, one thing we've got now that we never had before is social media. And I mean,
Yeah.
I love social media, but one of the things it does to try to keep you engaged
Yeah. Yeah.
is it sends you, more of what you're clicking
Yeah.
Oh
on.
God. I'm
And,
like the poster child of that, man.
well, yeah, I mean, you click on, what, name your thing, like, illegal immigration,
Yeah.
whatever side you are on that
Yeah. Yeah.
argument,
Yeah. Yeah.
Oh,
It
it
you get
starts
amplifies it. Yeah.
pounded by
feeding
it.
you,
Yeah,
but
dude,
it starts
exactly. Good
feeding you
enough.
like the
Good
the
comment.
worst of the
Yeah,
worst,
exactly.
you
I'm
know,
in that
like
loop, man. I got to get out of that loop. I got to
Yeah.
shut my phone off, man.
I
Trust
think
me.
it's
I
more.
mean, yeah, I
I think
mean,
it's
I'll
more
get
than
on there
that.
and I'll start getting pissed off.
I know,
Yeah. Yeah.
dude.
Yeah.
Trust
Or
me.
sad.
Now
Yeah.
you know how I feel. Or sad. I mean, or
Yeah.
lonely. I get it. All
But
right.
it also those who are on social media, those who create social media content, see the engagement that results when
Right.
they adopt a view that's an extreme one. So I don't even know if all these people believe what they're saying as
Well,
much
and
as,
and they may not even be people. That's the other thing.
yeah,
You've got Chinese and Russian
Oh
bots
my
that are like, hey,
gosh.
let's get these stupid
yeah,
Americans to
yeah,
fight with each other.
yeah, or Iranian, yeah,
All
Yeah,
right.
I mean,
So,
I get, I mean, I get this interaction sometimes that it's, I mean, you just you look at these people's profiles, they're like, these people can't be real.
right.
and they might not be. Guys, in
And
5 minutes, I got to go, unfortunately.
oh, I
No, no,
Just to
see.
it's
give you a heads
fine.
up.
Okay. All right.
All
So
right.
let's just go on to one more thing here then. All right. So Eric Balcones, he says he has this term degen paradise, right? He says degen paradise is one of our big themes. The word degen comes from degenerate.
Right.
Paradise comes from like aggressive trading, has to do with like 2x ETFs, aggressive products, et cetera, et cetera. What do you make of all that?
Who, me?
Either. Yeah, you, Greg, since you
What
got to
is that?
go.
What does that mean? What does that mean, Degen Paradise?
Like, young people like that are on Robinhood are looking for aggressive
Uh,
trading vehicles and looking for, new improved ways to invest versus 60/40 ways they can make money, ways they can bring in income. So
yeah.
I think a whole new psychology out there of what people invest in, i.e. Degen Paradise.
Yeah, I mean, listen, the YOLO meme, all those themes have worked, continue to work to some extent. So people get rewarded for aggressive trading, the single day options, that kind of stuff. I'm writing a book right now which has a big emphasis or a focus on the '87 crash. it's been a while since we've had those. Every so often, every few years, we have something. Oh, is this 87? It's 87. But, this generation, I don't think has experienced that panic, that feeling that I think we all have. Well, my gosh, I'm down 20, 30%. Geez. So, and when we have, it's snapped right back. So you get rewarded for being aggressive.
What do you think, Matt?
I mean, I have a lot to say about that.
Mhm.
It's going to be more than five
All
minutes,
right, we'll keep
but
it to two because I want to ask you one more question. Give me a 1 minuter.
yeah, I mean, the COVID fundamentally changed the market. You had a whole bunch of people in the late 90s thinking they could kill it on the internet stocks. They weren't connected to each other. The brokers had all the power. Turn around to COVID, same phenomenon, but now these people are connected. They're on Twitter, they're on Discords, which is more powerful than Twitter. And they've got all the power now, and they're able to trade without the brokers. They don't need the research. They can move in and out very quickly, and they're combining. These discords are all combined with each other, and that is a game changer. And now you've got a lot of the so-called smart money after Melvin Capital went under. Instead of fighting it, they're joining it. And
Right.
that's also a game changer. And now you've got, as we've talked about before, a president who, is a thematic investor's, best friend in, investing in different areas, tweeting about different things, all of that. It's changed the game.
All right, last one, real quick. All right, so you wrote a book called "The Shot to Save the World," chronicled the race to develop COVID-19 vaccines. I mean, you've written a lot of very favorable stuff about the COVID-19 vaccine, right? So, I
Yeah.
mean, I'm not clear, but I think, I would say I'm a skeptic, right? So, kind of talk me out of it, and whatever time frame you got left.
Right. You're going to get it delisted, Pat. Thanks.
Listen, the COVID shots are modern science's greatest achievement. They're the result of decades of serious research. mRNA now is at the point where it can take on, we're not ready yet, but they're working on it. Everything from cancer to MS and other kind of maladies and illnesses, if they keep working on it. But yeah, people are skeptical partly because they thought it was new, but it's not. Again, there's decades of research. There just hadn't been an opportunity, a virus like this to try it on. And they're skeptical because I think people overstated it. It's not a cure-all. It saved us because people forget we were just in our basements and unable to interact, and it prevented people from going to the hospital. It prevented serious disease. Yeah, you're still going to get it. The COVID is just going to be like a flu. We all get it eventually and deal with it, but it saved us from the serious, the people that are immunocompromised, people that are sick, people that are older, and it saved millions of lives. So, and I know I spent years talking to or a couple of years talking to the researchers, the people behind it, the scientists, the researchers, the executives. They risk their own lives to bring us vaccines that work. And frankly, the next time around, when we're all desperate for a vaccine,
That's also true. That's true. I give you that one.
the next time we have a pandemic and it'll come, and we're like, oh, where's Pfizer? Where's Moderna? We
That's
want to
maybe true.
really after how we treated those guys, how we disparaged them. And I know people at Moderna that couldn't go to the office because there were protesters in front of their building. They were coming in to build vaccines for us.
All right,
So yeah,
last
I'm
one, real
animated
quick.
about it.
So,
Yeah.
what if, like, I come back and say, wasn't all that just like a big psych op, and we were all in our basements because there was some
No, you don't
massive
remember people
structural
we're in
thing, like,
hospitals.
oh, I
No, we were
can't go outside
desperate.
because my neighbor sneezes on me from a mile away.
Obviously,
I
we
might like fall over and die that afternoon. That's how I felt. You know what I mean?
really, at the time, you didn't have neighbors that were in the hospital and they couldn't
Not
figure out how to
really.
deal with them. Oh,
Well,
really?
not really. I
I
mean,
don't
I
know where
knew
you.
people that were, but I mean, I don't know. I just,
I
Well,
was in the New
Pat,
York
you
area.
you never leave mom's basement anyway. So
I was in the New York area. I know people that are still affected with long COVID
Okay. No,
and
well, I
are
appreciate
tired
I
and yeah.
appreciate what you're saying, and I do agree that we can't discount vaccines in the future, because if you did not like the way this one went down, because clearly
Also, it's
stuff
okay
could
to
go
say
down
mistakes
a
were,
lot worse in the future, you
but
know?
also it's okay to say mistakes were made.
Yeah,
Obviously, we should
okay.
have tried to get kids back in the school. The nursing home mistakes, yes, outdoors, it's preposterous. Now you think about it. Why do we need masks outdoors? We were learning. We had never gone through this thing before.
Yeah, that's also true. All right, man. Thank you. Thanks for coming
All
on.
right,
I'll try to
good
make it
chatting, you
look good.
guys.
I'll try to make it
Thanks.
look good in the cuts, man.
I appreciate it.
All
Bye,
right,
All
later.
guys.
right,
See you
bye.
later. Bye.